Hi, Charles Sizemore here. Today I want to answer a question I get asked pretty regularly. Can dividend income pay my bills in retirement? Of course, the short answer is yes. Yes, it can. Dividends can pay your bills in retirement. The longer answer is it depends. And it depends really on two things. What is the size of your capital you have to work with, of course, and two, what yield are you getting on those assets? So the big, the main calculation here is the dividend yield. If you have a stock or a bond or anything trading at $100 and it pays $5 a year in income, that's a 5% yield. That's actually pretty good in this market. Now, in peak income, I look for yields a little bit higher than that, of course. But the S&P 500, for example, yields less than 2. So let's play with some numbers here. Let's say you have $1 million portfolio, and let's say that portfolio is invested in an S&P 500 index fund. Well, the dividend yield on the S&P 500 right now is about 1.8%. That means on your $1 million, you're getting all of $18,000 a year in income. You probably can't live on that unless you have a lot of other income coming from other sources. That really won't be sufficient to pay your bills in retirement. Now, let's say you have that same $1 million invested at a 5% yield. Well, now all of a sudden we're talking about $50,000. That's not, going to give you a life on the French Riviera or something, but that's a more respectable number. Now, let's say that same $1 million is invested at 8%. Well, now we're talking $80,000. That's a significant chunk of change. If you combine that with any income you might have from Social Security, that can get you over $100,000 pretty quickly. If you have other sources of income, royalties, any sort of pension from your employer, now you're talking. So dividends can be part of that mix. Whether or not dividends are sufficient by themselves to pay all of your bills in retirement, again, that's just going to depend on how big your portfolio is and what yield you're getting on it. Now, in peak income, I do look for yields that are generally north of 5%. Some yield as much as 10%. I generally don't look for yields much higher than that because I find if I do, I'm taking risk I don't want to take. It doesn't really make a lot of sense to try to achieve a nice stream of dividends here if you're putting the capital at risk in the process. So for me, that sweet spot tends to be between 5 and 10%. So do the math. If you have a $100,000 portfolio and you're getting between 5 and 10% on it, that's $5,000 to $10,000 a year. If you have $1 million portfolio and you're looking at yields of 5% to 10%, you're looking at $50,000 to $100,000 a year. The amount of income you're going to get is a function of that. So, I hope that answers your question a little bit. If you are interested in learning more about dividend investing, that's what we do in peak income. You can see a link to find out more here in the description section of this video. While you're at it, you will also see a link to our free e-letter, The Rich Investor. We talk about a variety of topics, retirement, dividends, general investing, the economy, you name it. So give that a look if you get a chance, and I hope to see you soon.